All right, everybody, welcome to the session here with Nick Chahine, lead trader at the Options Inner Circle chat room. We're going to get this started here in a little bit. What's up, Jacobs, Nate, Linda, Justin, Sally? Welcome to the session. We're going to be covering trade ideas, options education, setups, iron condors, butterflies, calls, puts, everything from basics to intermediate, advanced, and everything else in between. So make sure you're paying attention. We have a packed session with Nick, trade ideas, all that stuff, right? So if you're looking for education, if you're looking for trade ideas and setups and learning how to use options in this market, you came to the right place. All right. So at the end, by the way, at the end of the session here, we're going to have a live Q&A with Nick, right? And we'll do it throughout the session. We'll show you the live room where Nick is the entire day trading with the chat member. He has a live room basically 9 to 5 the whole day, live trading. Let's go ahead and bring on Mr. Nick Chahine into the mix here.
I just went out there to fix the sprinkler. Like I had 10 minutes to kill. I took a shower outside. So if I look out of sorts, that's because I just took a shower outside on the street.
Right. Well, look, it was a pretty intense chat room. I know that we had several people yesterday that popped in there. So you have a lot of new friends there, right?
Yes.
The session.
Yes.
So tell us about that, because so that people can kind of get a sense what happened.
Yesterday was a big day. Let's start with the most exciting part of my day, which is spending, 9 hours in the live room. That's the average amount of time I spend every day with you. So the members get to have the opportunity to pop in whenever they want and have me behind this boom mic and looking at my screen like you're going to be looking at. And we are discussing everything. The priority is to make money intraday for fast traders. And sometimes you don't need to be fast. I cannot be fast because I'm paying attention to hundreds of people and answering dozens of questions at the same time. So 2 days ago, I took calls and I forgot I had them. That's how busy I got. It was like $100 and some and gone because I forgot to book the profits. It was a good trade. I just forgot it was open. So the opportunity is, for example, at the open, I put a trade on that paid me 20% from the open. And I did that twice this week, 4 times this week. And I skipped 1 day. The trades are available for any level of options trader, but first they need to practice with paper money. So if you're an options trader and you're in the room and you can execute a simple spread, you can make those trades and they expire every day. As far as trying to time the market for, is this a good time to buy Apple? Is this a good time to buy? The answer is yes, 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 yes. But the answer is yes, they can all get a lot cheaper. And that's the scary part. However, when you're trading in the middle of the day, you have the opportunity to change your mind within minutes and say, ooh, I don't like this. Let's get out with a little loss, as opposed to getting stuck in a big stock. And I'm going to help you I think today's focus is going to try to show the non-options people how options can make your trading and investing a lot better. I'm not telling you to ditch the way you trade. I want to show you how you can, especially in this challenging day. Last night, I kid you not, about 6 o'clock my time, I was answering a private message from somebody who was looking to stock replace something. And the stock was Unity, but it applies to any stock. So I got the idea. I was like, okay, in my next webinar, I need to address this because I bet you these people are not the only ones. It's a good company, but they're stuck and they want to protect themselves. They want to stay long, and they don't want to get stuck with a tax thing where the wash sale rule and all of that. So we came up with a plan to do that. So I will share that idea with you because maybe it can help you out. Also, I'll share the idea of how you can protect yourself sometimes for free if you own shares, and all the while referring to what happens in the live room. So this is what happens in the live room. Somebody comes in and say, I'm stuck in Unity. What can I do? And I'll say, what's your trade? And then we go on and I'll share Unity and all of that. So let me take over the screen if you don't mind.
Yeah, let's go ahead and rip it, folks.
We are looking at Nike right there. Share. Okay. So you should be looking at my Nike stock, and I'm going to open my chat room to keep an eye on how badly you like me or not like me. I do this all day, so I've gotten comfortable talking to a whole bunch of people. It's the end of the week. I'm exhausted, but I'll do it. I'll do it. If Rodrigo is going to be here for us, we got to bring it. So Hot Rod, thank you for putting this together on a Friday. I appreciate it.
End of month, and I know there's end of quarter, right? For many companies, is that right?
End of quarter, indeed, and nobody talked about it.
That's why I really, try to get this session going, because, end of quarter, a lot of things change. That, right? And you also do trades that are like like 6 months out, 3 months out, like iron condors, butterflies, credit put spreads. And so folks, that's really, yeah.
So Ricky in the chat room says, is he a plant? Because that's what I do. If I had a choice of doing one thing for the rest of my life, is doing that. Iron condors that expire every day. So that's the trade that got me 20% and 25%. So Ricky's saying, I'm reading Ricky's note. I would like to trade 0 DTE. 0 DTE means it's a trade that expires today, 0 days until expiration. Iron condors. Oh, okay. Do you discuss the SPX Iron Condor in the chat room each day? Yes, I do. When the market opened today, I opened my trade, and I'll explain it and I'll show you what it is. And I immediately got filled, which means I took too little. It means I left money on the table. So I was the guinea pig, and I said, go lower, ask for more, whichever. So, and my trade was a breeze. I never looked back at it. It was to get long the market. Who went long the market today and made money? I did, right from the get-go, and I didn't look at it all day. I took a risk at SPX 3560. 10 minutes, maybe. Okay, so this is where the SPX ended the day. I did 3560. These were yesterday's. So I sold a credit puts. I said to somebody, hey, you think the SPX is going here today? That's from the open. As soon as the market opened, right here on the dip. This is today. The market fell. Somebody said, oh, we're going way lower. I said, you know what? I don't think so. So I collected money from them. And then we rallied. And then I shared a credit call spread, which is the opposite bet. Saying somebody saying, oh, we're going to go and fill the gap. I said, maybe not. So this will be a trade, 37.30. I didn't get filled, but other people did. I got busy. So between these two, you can make 25% on the risk. And the bet ended today. The bell rang. Whoever did this, 25%, 20 to 25% on their risk.
And this, just to confirm, this is a trade that opens and closes the same day. So there are people
you don't even need to close it. It just dies.
And people do this every day, like because it's getting a lot of very popular. People are asking about.
I just moved it from yesterday. This was yesterday's. I just moved it. It was $20 off yesterday. In fact, if you did the same trade from yesterday today, you would have also won. Yesterday, I made a mistake with my trade, which paid me 25%, and I'll tell you why. So I was conducting an experiment. I was like, here's the thing. When the market opens, the options are super nervous because there's 8 hours on the clock. That's the longest it can be today. And the bet ends today. So that is the most volatility you can have is at the open possible. And I said, I'm going to sell a spread before the open and see if I can guess. So I offered to sell that spread you see on the 35.80, and I asked for 60 cents. It was too little because the market opened like this. Where is it? Yeah, that's yesterday. The market opened like this. So as soon as it opened, I got overwhelmed, and I asked for 60 cents. They gave me 95. That was so nice of them. So I ended up with a really nice win, but I sweat it because I was trying to something new, but I won. But these trades, yes, Rod, you put it on during the day. You can put it on with an hour and still win 20%, but then it just becomes a little more iffy.
Right. And some people can do this that have full-time jobs. They can do it on a weekly or monthly or 6 month basis.
I made a living for years doing these because they weren't available every day. They were available once a month and then once a week. and then 3 times a week, and now every day they have a contract. First, there were only 3 or 4 tickers, the indices, and they were only once a month. And then they brought 20 tickers, Apple, Google, and all of that. And then they said, okay, we'll bring more tickers. And then they said, hey, wouldn't it be fun to have one a week? They added the indices one a week, and then the stocks one a week. And then the SPX had 2 a week, and then 3 a week, and now it's every day. I love it. Thank you, the gods of options, because now I can make 25% every day.
And some people say, like, oh, just make 1% a day, but I mean, 25.
Some people make 10% a year, right?
Right.
So this is 25% a day.
Well,
now,
and the other thing here, Nick, before we do get into it, because
they're not foolproof.
We have a packed session here, but before we do get into that, we have hundreds of people here, so let's just ask the question really quick. If this is the first time, put a 1 in the chat. If this is the first time that you are in one of these sessions, and put a 2 in the chat if you've already been here at least once. And that way we'll know how to take the conversation.
And if you remember, put a 3.
Okay, definitely a lot of ones.
We see 3s.
Couple 2s.
What
up, Stuart?
Hi, Judy.
Raj, Judy. Oh, yeah,
gotcha.
Like I could see.
Shabir, I have a Shabir. You not a member?
Liliana, what's up? What's going on? Okay,
hey,
so yeah, definitely. All right, that's definitely
Bonnie.
A lot of ones, Nick.
So given that, I kind of Ryan sent you here. Ryan's a good guy. I was just going back and forth emails with him discussing this crazy market. That's crazy. My new glove is just a bath outside from hey Liliana. Is this the Liliana?
Yeah, it's her. It's Liliana.
Oh, okay.
Yeah,
cool.
Yeah, she's from the room.
Oh, you're talking to him. Okay. So here we go. Here we go. I know that there are a lot of options people here, and some people are looking to get into options. So somebody said, how do you put these trades on? I'll show you exactly how. Let's do this. If you don't mind this time, I want to jump into options right away. All right, so this is a practice platform from E-Trade. I'm not recommending it. It's not very good. And I'm going to go to Apple and show you how one would enter a trade. But first, I want to talk a little bit about what options are. At the risk of, hey, Carlo, at the risk of regurgitating stuff you already know, so stick with me, maybe you'll pick up something new. But meanwhile, I'm going to tailor this to somebody who's never seen options. So these are options contracts. So what are options? They are contracts between buyers and sellers. So just like any other contract, they do have terms and conditions. Let's go through the main terms and conditions that matter. First things first, this is everything you see on this page is about Apple. That's identifying the product. They call it the underlying on Wall Street. Forget that. And then the second part is time, right? So in this case, I chose November expiration, and luckily they tell us it's 49 days. So now I have 2 terms. Everything here is about Apple. Everything you see here has 49-day life cycle. So whatever contract I end up striking here is for 49 days, period. And the other thing is how many? 100. What is 100? Everything here represents 100 shares. So if I pick one contract here, that's 100 shares. One contract here, that's 100 shares. So now we have 3 terms out of the way. Now, price. Okay, Apple at 135, Apple at 140, Apple 155. I choose the price. Okay, so now we have the important stuff. Okay, so they're contracts, they have terms, they have a buyer, they have a seller. Why do I say it that way? You hear on CNBC, they say they are buying the 125 December put in Apple. No, they are not buying the December put in Apple. They are buying it and selling it. They are transacting it. Every buyer has a seller. And for some reason, they see that the deal was done under the terms of the buyer, so they think the buyer knows something better than the seller. To me, I always default that the seller is smarter because the seller is taking the risk, the buyer is making the risk. The buyer is just hoping most often. Somebody put this on my desk, one of these Nerf things. I think it's a hint. that I may be a little upset. I don't know. Anyway, so I'm not, but maybe. So the buyer and a seller are at odds, and some people like to read into, oh, it was done at bid, it was done at ask, therefore I'm assuming that it's a buy, not a sell. Keep in mind, there's a buyer and a seller of everything. All right. So now they come in two flavors, options. There's a put. Everything on this side of the page is a put, and then there's a call. Chocolate and vanilla. Everything on this side is a call. Neither is bearish, neither is bullish. They're both bullish, they're both bearish. It depends on what you do with them. Okay, keep that in mind. Puts are not bearish. They can be bearish. Calls can be bearish as well. It depends what you do with it. Okay, now another thing, a misconception. I don't need to own any shares of anything in order to buy puts and calls or sell them. I don't need anything. Anybody can buy a put. Anybody can buy it if you have the permission in your account. So I can buy a put whether I own shares or not. I can buy a call whether I own shares or not. In fact, buying a call is how I can get to buying shares. How? If I wanted to buy shares in Apple, but I don't want to spend 20,000, I can buy a call in Apple to represent that, to lock my price for 100 shares. So today I could have paid $770 to guarantee myself being able to buy Apple at $140 a share. So if I chose this call right there, 140 call, paid $7.70. Remember, we said 100 for every share. Every contract is 100 shares, so it's 100, so $770. So for the next 49 days, essentially, I am long Apple if I want to. I can make a call to my broker and say, give me my shares, period. I paid $770. I want my shares right now. You'll have to buy the shares, but they're guaranteed to be at 140. When would you do that? When you're right and Apple rallies. Let's say next couple of weeks, Apple rallies to 160. You call up your broker and say, give me those shares at 140. The person that sold you that call is obligated. You're not obligated to take the shares because you make the call. The person who sells you that call is obligated to deliver the shares if you call on them at 140. So what do? They have to go buy it at 160 and give it to you, or they own them already, in which case they sold a covered call and they deliver. Now, what about a put? If you already own shares, the way to explain it, if you already own shares, you can buy a put as insurance. So just like this one gives you the right to buy shares at a certain price, in this case, I chose 140, buying this one would give me the right to sell shares at whatever price I choose. In this case, I choose 120. So neither of these are trade alerts. I'm just trying to explain calls and puts. Okay. So Orlando, are you listening? I'm explaining options to you. So in this case, if I owned 100 shares of Apple and I wanted to sleep tight for the next 49 days and not have it crash through 120, I can pay $280 to guarantee my 100 shares that at any point in time, I can make a call to my broker and say, please sell my shares at 120. And for the next 49 days, I have that right. You're not obligated to do it. This is like you buying insurance on your car and having a fender bender. If Apple drops to 130 and you're okay with what's going on, you don't have to file a claim. Even if it drops to here, you don't have to file a claim if you change your mind. So what do you do with the put? You sell it. So if price falls to here, and I look around, it's like, you know what? I think this is a bottom. I'm okay. Things are cooling off. Ukraine this, Powell said that. You say you're comfortable with it. So you paid $280 for this put. Now it's like $500. You sell it. You made money on your insurance claim, on your insurance policy. Just don't let it expire in the money. So if price falls below it, don't let it expire. In 49 days, sell it or exercise it. Otherwise, you end up losing your share. Okay. So this is a quick lesson on puts. So you're saying puts are bearish. They're not. For example, if I own shares in Apple, I love them so much that I don't want to sell them. If I was worried about them, I would sell them right here. But I love them so much that I'm spending money to keep them. That's not bearish. So what about the seller? The seller loves them so much, they want them off me, but they want them a little cheaper. So they are collecting money, hoping they would get my shares. So both scenarios are bullish. When is a put buy not bullish? It's bearish. When I don't own Apple and I buy an Apple put, that means I think Apple is going to fall because that's the only way I can make money. I buy it for 280 and I hope Apple falls and I can sell that put for 520 or 500 or 600. So that becomes the only scenario where the put is actually bearish. So let's recap. Options or contracts, we can choose whatever time frame we want. We can choose whatever price we want. We can choose where we want to buy a put or sell a put, or buy a call or sell a call. Never ever sell a naked call. Okay, so this is the quick skinny. Somebody said, how do you place trades? So this is, if I wanted to buy the put, this would be me buying this put. And if I send, it'll go, but now the market's closed, so it won't go. What about the other side of the trade? The seller of the put is collecting my money. So my money goes from my account to his account or her account. Earlier, I said I would sell a put spread, right, on the SPX. So somebody said, how do you execute that? By selling a put and buying a put below it. So I would sell something and buy something cheaper. The net effect is a credit. And if I send this trade, I am bullish Apple without needing a rally. As long as Apple doesn't fall through 120, I win. Earlier, I told you as long as the SPX didn't fall through 3560, I would have won, and I did. And I collected money for it. And now it's zero. Whoever bought it from me lost their money. I collected their money. If I did 10, that's $600. If I did 1, that's $60. And I can do that every day. So this is Apple. I can't do it every day because it's once a week. And in this case, I collect money. The buyer needs a drop to win. I don't need anything to win. If the stock rallies, I win. I make my money. If the stock doesn't rally, I make my money. If the stock falls a little bit, I make my money. If the stock falls a lot, I could lose money. Okay, so that's the scenario with Apple. To explain how options work to a degree. So if I wanted to buy a call in Apple, like I said, I'd just simply buy a call in Apple and say, okay, let's go. If somebody wants to buy a call spread in Apple, they can just do that. They buy a call and they sell a call above it. Why? To lower the entry price. Now, instead of spending $770, I'm spending $540. Why? Because I'm paying $770 and I'm collecting $240 or $230. The net between the two is 500 and something. So what's the disadvantage of doing that? I'm limiting my upside potential to the difference between the two. So this is $15 wide. I can make $1,000. So this 500 turns into $1,500. If I didn't do this, I just paid the 700 and Apple rallied to high heaven, I continue to make money as long as Apple is rallying. Okay, so these kinds of questions and debates we do all day inside the chat room. And it's so fruitful, I brought a snapshot. I usually bring like 10 or 15. Today I brought only 2. I'll tell you why, because I was too busy. Sorry. So we caught a couple of good runs today. You can see them on the left side. That's what they're watching live. Look at this 15-second charts on the SPY, and the SPX was on a different screen. And then I said I had a couple of call trades and a couple of huge put trades. I suggested buying puts. I didn't check on them. I'll check in a second. Oh boy, those who took those puts probably paid off their mortgage for 3 or 4 days. 3 or 4 months. So these are the results. The people are chiming in. I got in and I got out. So this one did 40%. I'm doing air math. This one I got 23 days out, 5 lotto. But here's the best message of the day. It happened after the market closed, unsolicited. Tim, are you here? I don't know. I hope you don't mind. Read this. I only get to be live in the chat room once or twice a week because Tim has a job. Challenging times for sessional. So he said, the bottom line, your technical understanding of markets coupled with a 50,000-foot view, because I provide write-ups every day and I'll show you where they go. So he's able to trade even though he's got not a lot of time. So he does not have time to come in the live room and watch me trade live. He can still benefit because he has access to my chat room. This is not my chat room. This is my live room. It had 270 people that day. So this is my chat room where we have hundreds of people in there. There's still 134 people in here, and it's the weekend. People comment all day, every day, and share charts and have questions. Like somebody asked a question, Jeff jumped in, unsolicited suggestion, and answered their question. And I didn't read that. And I came in here and I answered, and then I looked up, and that's what he had said. So it was hilarious. And then private messages, these three people kept me busy. I think, no, these two, this one yesterday, these two yesterday, and this one. She was discussing some things live. So you have a place where if you have a full-time job or you're committed with your time, you can't be in the live room. You have a place of recourse. You come in here, you pop your question. It's timeless. 24/7, I answer these. I don't leave questions dangled. Nick, the IWM trade you posted already at 100%. I didn't even read this until now. Check it out. So I'm going to go see if I can remember what that trade was, because I'm pretty excited at seeing how much money they made. Why didn't I take it? Okay, let's see. Come on, load.
Yeah, and a quick question there from Fami Kadiri. Nick, is this good for complete beginners? I was part of another group where I felt out of place because I had no idea what everyone was talking about. You have some videos also that can help them as well,
Yes,
right?
yes, I do. The videos are standalone videos. This one is 10 minutes. We'll introduce you to put options. What's a put? This one will introduce you what's a call. This one will show you what is a spread. So 9 minutes, 10 minutes, 12 minutes, 11 minutes. This one, a couple of minutes to introduce credit spreads, because this one deals with debit and credit spreads. And this one will tell you what's the difference between cash settled. And anytime you have a question, you pop in and you say, I don't understand this. I'll make a video for you and answer it live or make a video for you. So whatever level you're at, I think you will have the opportunity to level up your game by a lot. So I'm making you this promise. I'm making you a guarantee that if you enter the program and then you leave it a couple of years later, you're going to be at a completely different level, especially if you have time to spend a couple of hours here and there a week inside the live room. The comments inside the live room are so spot on, and they apply to any time frame. For example, if you're in the live room, I'm making comments on a chart that says 15 seconds. Whatever comments I'm making, they will apply to a chart that says 15 minutes, 15 days, weekly, monthly. It's all the same concept. And people in the live room share their own setups. For example, 2 days ago, a fellow named Ryan, who is an excellent swing trader. I don't know how he gets his ideas, but he is unbelievably accurate. He shares. He goes, I'm buying puts in blah, blah, blah. And then they say, which ones are you buying? He'll say September, and he'll give a level. 2 days ago, he said, I'm buying puts. And then the next day, he shared his winnings with me, and they were substantial. They will pay my overhead for 2 months. And I live in Southern California. So he did well. So today, when the market was halfway down, he said, I'm buying puts right here. I thought it was odd. Guess what? By the end of the day, he could have booked all of his puts for another run of incredibly high profits. He shares his trade. A few other people share their trades in a little bit faster, a little bit different. So if it's not from me, it's from the others. A fellow named Rami shares a table that is so incredibly detailed and pretty that I love it. He just sent me the file. I wanted to look into it and see if I can pretty mine up to look like his. Mine is super accurate, but it's not that pretty. So maybe I'll pretty mine to look like his. So it's a team effort. Somebody's asking, I just saw a question. Do I use fractals for verification? Mark, I have fractal experts in the room. I don't need to use them. So Katya comes to mind. She's a pitchfork person. And I think fractals are a big portion of it.
Right.
I have engineers that disagree with the term fractals, that they say it's misdirected. But I said, this is Wall Street. They like to use big words like that.
Okay, Lenny has a quick question there. So okay, perfect. Lenny, I'm going to post the link I'm getting a lot of questions here about the room, so I'm just going to go through this really quick, folks. Questions.
Okay. Listen to this. I believe this is the put I set to buy. And if I'm not mistaken, it was 65 cents. So let's say it was $1. What does that mean? It closed at $815. So, in fact, yeah. So if I paid $1, I could have closed it at the bell for $800. So if I did 10, that's $7,000 in profits.
Right, and that's okay. That's interesting. We're going to talk about a lot of that because this session we're not even halfway. Okay, so all right, thanks for the questions, folks, and let's go over this really quick because I do want to focus on the session. All right, so are the sessions on Sundays? So I don't know if I don't think Nick mentioned this, but as well, like too much on detail, but basically the sessions on Sundays, yes, they are recorded. Basically what Nick Chahine does is that he'll put a form out, all the chat members put in their tickers, he reviews them on Sundays and sends out the video. The recording is posted in the live room. So that is something that you'll have so that you can get fresh trade ideas, fresh setups. And Monday, you start with not just with this in mind, but also adjusting trades because Nick is putting commentary there, right? Good question. Marlon, next one. Does everybody that joined get a free laptop until midnight? Yes. We're doing a laptop giveaway. It's a free Google Chromebook that you're going to get, but you have to sign up before midnight. Then what is the chat room schedule? It's 8:30 a.m. all the way to 5 p.m. Eastern.
The live room is from before the market opens till after the market closes, a few minutes there and a few minutes there. The chat room is open all day. Now, the live room is where I'm sharing my screen live and talking to you people. I call it the live trading room. That's the one that's open 9 hours a day. Before the market opens, I'm there. I don't try to talk before the market opens unless there's something going on. And I stick around until a little bit after the market closes, especially if we have earnings. So you have 9 hours of me live talking to you like this. You can address me about anything. And then you have the chat room, which is this. This is there. It's like Microsoft Teams, Discord, Slack. You just pop in and tell me what you're thinking. You post your question. And if it's a Saturday, I see your question come through, I'll answer it. So this chat room is open all day, every day. The live room, trading room, is what he's answering on. It's open from before dusk until before dawn until not dusk.
Right. Okay. So let's just get through these questions here really quick, and we'll get back here into the session here in 1 second. So the schedule of the blue chat room 24/7. The other room is Monday to Friday, 8:30 a.m. till 5 p.m. Eastern. Sunday, 10 a.m. Eastern till 1 p.m. Eastern. That's every Sunday, and then the other one's Monday to Friday. Let's see. Next one. Money back guarantee. Yes, Philip, there is a 30-day money back guarantee until, but you have to start this whole deal. Everything is until midnight. Amlen in the chat is asking what kind of capital is needed to join the room to start trading. There are SPX trades that Nick does that are $400. Okay, just to answer that one on the fly for you. Well, let's get through the questions first, Nick. What is the price at renewal? It's going to be the same as today, 70% off. That's when you guys, if you sign up before midnight. Next question here, good one, so that you can kind of lead on with this one. Are you able to help somebody that is a total beginner in options and trying to learn as they go?
Yeah, absolutely. I have an emphatic answer, absolutely, because here's what you need to do. You know how much money you need? Whoever is asking about capital, you know what you need? Zero. You need to not use capital. You need to learn how to trade, make mistakes with fake money, have people paper trading, family members, paper in the program, paper trading. If you're actually coming in with live money and taking live trades, I think you're making a mistake. Nobody picks up a weapon and goes to war, right? They pick up a stick, they make believe they're shooting, they pick up a weapon with rubber bullets and blanks, and then you learn the strategies and then you go to war. You should not jump in and start using real money. You will learn on the fly. Today, I was talking to somebody. She's pretty good, and she learned something new that cost her money. First year I did it, I thought I was a genius. I had 6 figures. Maybe it was just sheer luck. And then the next year was not was not so good. So you need to paper trade. And if you need to learn, I don't think there's a better opportunity than to have a school open all year for you, where you can pop in and say, hey, I'm the teacher, I'm available to you. You'll see the trade write-ups, take them in paper trade. Be aggressive, be more aggressive. If I collect this much, be more aggressive. And then you'll learn how to deal with pressure if you're more aggressive. So the trades that require $400, if I'm doing an iron condor, which is what those trades are daily, and I collect $100, my maximum loss is 400. So I'm getting 25% on my risk. So if I had an account with $2,000, I'm risking $400 to perhaps making 25% of my money every day. So I, on purpose, have an account with about $1,800, and I keep it under 2,000 to force myself to trade like someone with a small account. I take money out of the account as it grows. So it is a viable way to not risk a lot of money to create income from a spread. Anyone can do it, but it's not easy. They do go sour, and the trick is not to take maximum loss when they do go sour. Today I had a discussion with somebody. Nicole, are you here? Hi.
And you can also manage the trade with yourself. But I really quick, folks, because you guys need a little bit of time of a heads up. Anybody that does join while we are live in the session, and we have about, I don't know, maybe an hour, I don't know, a little bit around there left. Anybody that joins while we are live is going to get bonus trade alerts and strategies from Nick Chahine. They're separate from the chat room, but if you join while we're live, basically Nick Chahine, you're going to get more of those trade ideas and strategy sessions. All right. So just wanted to get that out for you guys to know before we do finish the session off. I don't know how much Nick has in him.
I'll do as much as you can. I mean, I'm already taking the shower, so I'm ready to go to bed. No, I'm just kidding.
I mean, look, it's Friday.
I gotta go finish up. I dug up the grass. I fixed the sprinkler. I need to put it all back together after I verify it's not.
Look, if you don't have plans, Nick, for this Friday, I don't have any plans either. Okay. The folks, the members here to me mean a lot. So I'm willing to do it. I'm willing to spend the night here.
Well, we did 2 hours last time. I don't think I can do
way more than that, man. It was like an 18-hour day.
Yeah. Okay. I got nothing to do. Oh. All right. So I do have something to do. Actually, my buddy is fighting tonight. I have to go to his fight. I bought a ticket. I have to go to his fight.
Nah, come on.
What? Anyway, so here's the deal. The getting into options is tricky. And somebody asked, how do I use options to make my trading better in a descending market? So if you want, we can tackle that in a little bit. So one conversation is, this is the S&P 10-minute chart. If I go to a daily chart, it's going to look busy. Guess not. So this is a daily chart. What can you guys notice? Just look at it. What do you see? What's evident? Who's in control of the action? The sellers. Why? We have lower highs, lower lows, right? So we get here and CNBC is saying, oh, we're going to the moon. And then we do this. And then we get here, we test the floor, and then we make a new low. And then we get here, and then every day, oh, we're going to the moon. And then we do this. And then, whoops. And then we test the floor and we repeat. That's exactly how that happens. Look, they get here, everybody panics, they buy puts, the market maker says, thank you. Everybody buy calls, market maker says, thank you. They come here, they can't hold the floor. Prior support becomes forward resistance. You see that? Not a coincidence, right? And then they get to here, everybody buys puts, everybody buys calls. Oh, we beat this one. Yeah, but you're still in the descending channel. And then you come back here. And we're just losing this. And I'm going to scare the metics out of you right here. The downside target of this is like 2,500 SPX. And this is an inverse cup and handle. That's the downside target from here on down. I believe it's 1,100 points in the SPX. Today we lost it. We technically triggered that today. That's why the close today was the worst kind possible. First thing in the morning, I said, I sure hope they don't plan on closing red, where the small caps that were up 1.5% turned around. So that's why I said buy puts in the small caps. I said the SPX is acting like it wants to lose its lunch. And the biggest loser would be the small caps from plus 1.5% to minus whatever. Buy the put. And I offered the put ideas in the IWM and the RUT. Somebody who took it made $700 per contract. I sure hope they took it. Hang on to it. So this is the opportunity now. How can I make money with this? Well, I can buy puts to make money with that. The VIX is pretty high. Puts are expensive. I can buy a put spread to actually actively short this. I can short by selling a call spread, but hopefully on the rally, not on a big down day after how many red days in a row. So if we bounce Tuesday into Tuesday or Wednesday, I should be looking for places to do what? To, first of all, not add to my longs because we're going to higher, but to add close longs that got better, like bail me out on the rallies, and add some bearish positions to create balance. I'm not asking you to short stocks outright, but if I'm long stocks, or I always have bearish positions on the indices as balance. And the idea there, I would give them in the live room and in the chat room, selling call spreads. So saying, oh, the stock market is not going to here. Or buying some puts or put spreads. I never recommend buying puts when the VIX is this high. So then I can spend $300-400 to make $600 or $700 if we correct 5%. So the direction when I left it on Friday today with my team, I said, if we don't rally 1.2% on Monday, we're likely to fall another 2.8% to bottom at 3,500, 3,520. Bottom one and bounce and try to get to here and fail. Let's see what happens. Like this.
Hey, Nick, really quick here, man. SZELL215 and Jack Roth. Welcome to the family, friends. Let's go. Well, make sure really quick, folks, for you, since you guys just joined, make sure that when you're going to get basically like an email that says like laptop delivery, something like that. Fill it out because that's where we're going to be shipping the laptop to as well. And you do qualify for the bonus trades and strategies if you sign up live, like Jack and Jayzel. And you're also going to be entered into the raffle. We're going to do a great event. It's either going to be New York and Manhattan or in Miami for our. We're going to have a meetup of the members. So just for y'all to know.
So Benjamin says it looks oversold. It looked oversold up here too. Oversold can definitely sell more. I'm giving you directions. If we pop next week, use the pops to get out of trouble. Don't add to your current longs that you have. Like if you own shares, don't add. You don't know anything new. Book profits faster than normal. If you bought calls and you got lucky, book profits. Don't assume it continues. And buy protection if you need it. If you need it, buy protection. If you're looking to short the market, it's a shortable trade. So I had a conversation today. Somebody said, hey, how do you like SoFi to add? I was like, I'm not adding to anything. I like SoFi for the super long term. So buy your shares. If you want to buy 1,000 shares, buy 200 and wait for the markets to drop. So I'm going to share some. I hope somebody is not here listening because they got fed up with me saying it. I have a friend of mine who reached out to me out of nowhere via text, bombarding me with the bad things that were happening 2 days ago when we had a bad day. It's like one after another. He enumerated everything, Iran, Italy, Ukraine, inflation, mortgage rates, and a couple more things. And I said, so what do you want me to say? I don't watch the news. So you're going to trade based on the news, based on your emotions. The news is designed to elicit your emotions. You would not watch if the news is not like, if the news was like, nothing really happened. Would you tune in? You wouldn't, right? Nothing really happened. We could have this, but nothing pretty serious. Instead, they make mountains out of molehills to engage your emotions. Who trades right when they're emotional? You don't. When you're upset, you make all kinds of stupid decisions. So he sold out of everything. He took a 50 or 30. I can check his text. He took out a big loss. Anyway, he took out a big loss, and 7 days, AA and WDC. In 7 days, he lost 50,000, and he bailed. The next day, we had a huge rally. He texts me the next day, and he tells me, how high can we go? I was like, wait, you reached out to me yesterday, and you're all panicked. And I said, calm down. Instead, you sell everything you have, and now you want to buy back in. And I hope he didn't, because then he lost another 50,000 today, because that's how it works. You engage your emotions, you're screwed. You listen to news, you're screwed. The news is not here to help you. The experts on CNBC are not here to help you. You want news? Go to Benzinga, get the headlines. Don't read the opinions. Get the facts. You want to know what the Fed's doing with the Fed rate? Read the Fed note. Don't listen to Leisman to tell you what it says. We're smart enough. We have tools, to tell us what's going on. And luckily, between the 300-400 of us, we can definitely figure it out. Whoa, that's a long paragraph. I can't read that much. I see PCE. Forget that. I'm definitely not going to read that. If you believe the government data, I've got a bridge to sell you. That data is so inaccurate out of incompetence. It's ridiculous.
Nick, really quick here, man.
Hey, Laurel.
You know the
I've
new
known
numbers
Laurel
that
for years. What are you doing here? You don't have enough of me?
You know the numbers that came out today, or I think it was today, that about the GDP, right? So does that match what you've been thinking about? What do you think about that
The
overall?
GDP was the other day, and the reaction to the GDP was ridiculously wrong. So they freaked out. What? They freaked out over the fact that the numbers were good, but they misread it. It says soft landing. Whether true or not, I don't know. But the numbers are not deteriorating, even though he's crushing the economy. So he's trying to crush the economy, and the numbers are not deteriorating. So the economy is so healthy. Even Powell, his stupid actions are trying to destroy America. How is this guy allowed to be in his job? I don't know. America is saying, no, we're hanging on. We're hanging on. Now look at the numbers in Europe. Oh my God, that is some scary stuff right there. So the ECB raises a quarter and then a 3/4 point, and all hell breaks loose. So it is insanely weird that our data is holding up. I think the elections that are coming up in November make things attractive, interesting. Let's say I'm the White House. I'm not going to get political, but maybe this thing is on purpose, because not one sane person would try to destroy the economy to control inflation. Inflation is bad, but it's not worse than a broken economy. He's breaking the economy.
So you're telling me that Powell is lying? Is that
No. His bosses are making him do what he needs to do.
I'm being sarcastic. I'm being sarcastic.
Yeah.
This guy is just like obviously
lie. There's no
doing
way.
that with a straight face.
There's no way.
Landing, yeah. But here's the thing, Nick. When you're a new trader, when you're new to this, you have no idea, number one, who this guy is, right? You're just looking at CNBC and you panic. You do emotional decisions that you shouldn't, right? Because of all this news being pumped in your face. 2 months till the next meeting. These guys have a countdown nonstop, like everywhere, right? And they're just pumping the stocks up. So
anyway, I'm so dejected at our financial leadership, like the people from Goldman Sachs and JP Morgan, unless they're in on it. How are people not speaking up? The Fed has a couple of jobs. The first job is to create jobs without creating inflation. That's its job. So last year they panicked because of COVID. They needed to create a lot of jobs fast. So the government threw a lot of money at it, and his job was to throw a lot of money at it. But everybody was saying, whoa, inflation. He's saying what? Transitory. And then suddenly there's no, I'm sorry, I was wrong. It was not transitory. It was like, oh, no, we need to not control inflation. They dress it up nicely. Price stability. Yeah, we need to create some price stability. Yeah, you need to undo the schmutz they did last year. So we basically gave them a table and a chair, And we said, please fix this table, it's missing the leg. So they cut the table, the chair, the leg out of the chair and put it on the table last year. That's his 2 jobs, fix these 2 things, right? He broke one thing to fix it. And this year he figured out, oh, they need the chair. He's breaking the table to fix the chair. And he's okay. And people think he's smart. He is not doing his job right. I don't hate the guy. I hate what he's doing on purpose. I just don't agree with breaking a country. I just don't agree with breaking a country to control inflation. I would rather pay $10 for a gallon of milk than to have people unemployed. Call me crazy. I speak from experience. My mother lives in Lebanon, and she has a lot of money in the bank, and the banks are broke, and their inflation is like 10,000%. Literally overnight, an egg triples in price, 1 egg. And what you could buy with a whole carton with, now you can maybe buy an egg, 1. So that's inflation that cripples the country because the country is already broken. Here we have high inflation, but nowhere near the skyrocketing inflation. In fact, I just got some statistics of places in Europe, inflation, which are way worse than here. So that would be a little bit concerning, maybe. But even then, these are stats that somebody just emailed to me. Estonia, Lithuania, Latvia, Netherlands. Look, that's CPI increase year over year.
Yeah, Germany is like, I think they haven't had that much inflation in 70 years, I read.
Yeah, but Germany,
that's before the Nazis even, like, you know.
Right. Well,
like,
they brought it upon themselves.
wow.
A lot of it is energy. X energy. I have the numbers, but I don't have time to pull them all up. Anyway, they threw themselves into a war of words that cost them dearly in their pocket and their infrastructure. And then the ECB is trying to do this. So we think our Fed is bad. These guys, this is the ECB, that's the European Fed. They finally got above zero. They've had negative rates. That's why there's something called TINA. Remember TINA? There is no alternative. That's why the bonds, the TLT, cannot find a floor, because there used to be a buyer by default, right? So now they're finally up above zero, and they're barely raising. And Powell is just going to town. Powell is going to town. It's just crazy. All these politicians have gone nuts. The central banks are creating, are making, what do you call that? Experiments with the world. And the biggest experiment is in the United States. This is CPI, Eurozone without energy. Change from a year ago. That's a lot. So anyway, change from a year ago, not absolute numbers. But
right.
Regardless, it doesn't matter to how stocks trade. Trust me. You can trade stocks without news. I don't listen to news. I trade really well intraday. I don't listen to one bit of news. Zero. What do I do? I watch your reaction off of the news, and I make money off of your moves. That's what I do. I watch to see how people react, and I try to make money off of it. Meanwhile, I have my own thesis, and I trade my own thesis. So I know that Facebook is pretty damn cheap. I know it can get cheaper. I know if we have a market-wide correction for another 10%, it would definitely get cheaper. So I try to get long Facebook in a way that leaves room for error. How? I would sell a put spread and wait for me to either get put shares or survive and make money out of thin air. So I have a put spread on Facebook that I sold. I'm losing on paper, but I can still make money out of the trade. So we'll see how it comes out in the next couple of
Nick. And then I have here Jackson with a very interesting question, comment. I was doing pretty well during the 2020, 2021 time when I started trading, but during the since this year, he's really, he's been struggling with trading options, and he's wondering if this is something that, I guess it's his first market like this. So in other words, right, you can help traders even if it's, bull market, bear market.
I don't care what the market does, as long as I have a good, clear vision on it. And in order to do that in the live room and in the chat room, I try to share what the options are actually telling us. On occasions, the options data breaks down. Today, the data broke down. It held up, it held up, it held up in the last 25 minutes, they broke down. Most often the option is the data is bulletproof. Why? They say follow the money. Well, that's where the money is. The market makers rarely lose. Today they made so much money off of the moves up and down that they didn't care at the end of the day where it went. So so we trade the price action. We invest in stocks based on pretty strong fundamentals and very, very strong technicals. So in the live room, we spend all day trying to hunt good opportunities. I try to hunt good opportunities that can share to slower traders that cannot be there. So if you're in the live room, you have a lot of opportunities because you're privileged to be in the live room. And but if you're not in the live room, you're going to benefit from me spending time in the live room with 300 people coming up with ideas. So today I came up with a few discussions. Costco yesterday, somebody brought it to my attention. I was like, thank you for bringing it to my attention. So my idea in Costco was that it has held up relative to its recent low really well. It bottomed in 23rd of September. The stock market just lost its June peg. So this one is not even close to being, this is the June bottom in Costco, and the stock market is already here. So this has relative strength, and it just corrected 17%. This is a stock I don't mind catching the falling knife in with kid gloves. How? I would sell a put spread down here to leave even more room to go. So I'm going to use this as an example. Listen to this. Let's do a quick trade on this one. I told you somebody reached out to me last night saying, I have a lot of money invested in stock ABC. What can I do to hedge my bet? I said, those are not Bollinger Bands. No, they're part of a harmonic trader, but they're pretty close. Thanks for asking. So the question was, how can I lessen my risk? I said, well, you can buy puts, of course, but that's pretty expensive. You can buy put spreads, that is limited. I said, you can do a stock replacement strategy. What is that? A stock replacement strategy that says, I like the stock. I've got $40,000 sunk into it. I'd like to replace it with something else. So what can I do? I said, the stock replacement strategy, it has other names. Please don't chime in. What it is, you get out of the stock, you collect your money and you put it in the bank. Now your money is safe. You say, but I want to stay long the stock. You sell a put to re-engage long with the stock, and we'll try to find a place. And then with the money that you sell the put with, you buy a call or a call spread. So this way, you no longer own the stock, but you're long the stock. If the stock falls to here, you may be assigned shares and you've avoided losing from here to here. And you got paid. When you sell a put, money goes into your account. Let's say the stock doesn't fall and it just rallies. You're long. You're long either the call or the call spread, and you didn't pay anything for it. This is called the stock replacement strategy. You took your money out of the market. You redeployed almost no money out of pocket, and you're still long the stock. That is an amazing strategy. That's right. You don't collect the dividends because you don't own the shares. But who cares for a period of time? You can rebuy the shares later. And not everybody loves selling shares. Like, people are so freaked out about, oh, I can lose my shares. Yeah, if you're one of those people, clearly that's not an alternative for you. Here's another alternative for you, is you can do a sell a covered call against your shares and buy a put. This way, if the stock falls, you're guaranteed an exit here, and you didn't pay much for it because you collected money for selling this and you paid money for buying that. That is basically renting insurance for almost free. That is another way. So if your stock is doing this, how I can help you deal with this descending bearish market is I will stop you from adding to your position here. I will help you try to trade long from these dips, and I will share levels that matter. And I will tell you signs of, okay, we are over the hump, that we're going to go do this to start building up. Meanwhile, I will offer any expertise I have as to strategies on buying insurance or renting insurance. Here's another fun trade, which I've never done. I haven't been in that scenario. let's say, let's pick another stock. I mentioned Unity earlier. That's one of those. If you own a stock that was hot for RK and now it's in the toilet, let's say you own 100 shares of Unity, just 100. So first, let me introduce a concept to you. It is called a butterfly. Okay, it can be call butterfly. It can be put butterfly. It's a strategy where, let's go with the call butterfly. Let's go to Unity. I don't know if that's going to be an appropriate one. Okay, so let's say it's a call butterfly. I would buy a call and would sell 2 calls and then I buy another call. That's the structure of a call butterfly. This is not a trade alert, please. I did not put any thought into it or anything. Okay, so these half 50-cent spreads are making it difficult. There we go. So I would buy a call, sell 2 calls, and buy another one. So the maximum I could lose is the money out of pocket. The perfect pin for this is if it rallies to 35 and dies. Okay. This is a call butterfly. I need a rally. I need it to come fast, and I need it to come to here and stop. If it goes above here, I start losing money. And this, that would make me like 6 to 10 times my money. So they're cheap because they don't usually work very well. But they do offer you an out in case of a burst. So why am I mentioning this? If I own shares and I'm buried in the shares and I don't want to add more risk and I want to double down, okay, listen to these. If I own shares and I'm buried, like my entry point is up here, and I want to double down, instead of adding more risk and buying more shares to double down and get out on a rally, the idea is if it rallies to here, I'm out even. That's why people double down. Don't ever double down. But I'm going to give you the idea of a doubling down and do your homework on it. Do your homework. Is pretty risky. Tricky, not risky. To do a butterfly that lets you double down with almost no money out of pocket using this strategy. So you buy a call, it's going to cost you money. You sell 2 calls, you're going to collect money. And you don't sell this. You don't buy this. Why not? Because you already own 100 shares. So you don't need to buy this. Correct? The trade of a butterfly is you buy 1, you sell 2, and you buy 1. Well, each contract is 100 shares, and I already own 100 shares. I don't need to buy the contract. I'm covered. My shares are that extra contract that I don't need to buy. And look, I'm collecting money to double down. So this one will cost me $50. So if the stock rallies to here, I can close everything and I'm out of my stupid position halfway through. That's one way. Look into it. I don't know what it's called, but that should work on paper. All right. So we would help deal with trading the trend. Like I would tell you what levels matter, what to expect. I would go into here and I will see, okay, let's see if we can get some clues from the options. I can tell you that this stock has upside pressure towards 34 in 21 days. The market makers, it behooves the market makers to push the price up. That's just me reading into the tea leaves. As far as November, it's too early to tell. Oh, okay. On the other hand, November is not too great. You can rally, but not too much. So a balance is about 40, 42. I don't expect it higher than 42 by November.
Right, Nick. And we did a quick poll here. Basically, over 80% of the people here are currently trading by themselves. And, you know, folks, from personal experience, I can tell you that's a recipe to blow up your account, especially if you're new. You want to make sure you have an instructor that can walk you through your trades, live feedback, live trading analysis, and more importantly, help managing the trade. It's not just opening and closing. Managing the trade is more than half of the job and where the real money is made. So you need help managing the trade because that's where most people mess up pretty much. That's why Nick is there.
Exactly. I have a passion to convince people to no longer trade on their own. Like my buddy, if he was in a room with 300 traders, he would not have lost 50,000 because he would have said, I'm going to close out of everything. One person in there would have told him, don't do it. At least one person would have told them, don't do it. Don't trade alone. Wall Street doesn't. They band together. They have media on their part. They cheat. They lie. They bend the rules. Wall Street bets, cheats, lies, bend the rules. You need a friend. Find a room. If not mine, find a room, and get it done. Hey, Devendra. Another person. Broken wing truth. A broken wing is a butterfly, slightly modified. Let me see here. Trading in groups is so less risky, fewer potholes. You will make fewer mistakes. Do you mind if I ask for a ticker or two so we can just do some applied examples as to what we do all day?
Yeah, Devendra says Nick is the best teacher. And by the way, folks, we have plenty of people that are here just to learn as far as in the live room before they start trading options, because they want to make sure they start with the right foot correctly.
So let me ask you this. If the room wasn't cool, why would these members be here? Aren't they sick of me? No, they're right here.
And it's a Friday. Come on, like
Yeah,
if they're
it's
here
a Friday.
and on a Friday.
Okay, so we have Tesla, we have LNG, DAC. That's the second day. Are you the same person from yesterday that asked for DAC? I've never seen DAC. Oh, Rosie. Liliana. I'm my turn first. Okay, so you made $500. Awesome. Okay, so you're asking about DAC. I'm going to look at DAC because you're here 2 days. Okay, Louise, it happens. It happens. You're not alone. I guarantee it. I guarantee it. What is that? Oh my gosh, I'm a mess. Okay, so let's look at DAC. This is a person who was in the last webinar, and I saw the ticker DAC. I was like, okay, I'm going to trade. Look at DAC this time. Oh, first of all, it's a micro cap. It's a tiny, smaller than small cap. Second of all, oof, how much do you love this company? What is this? What is this? How can your net income be higher than your revenues? Man, provision of marine and seaborne transportation services. What, did they find treasures? Are they treasure hunter? Like they spend some money, they sell some things, and then they find a treasure? I mean, that's the only explanation I would have, where your
Nick,
actual...
Really quick, want to give a shout out here to Kara Brown, Miss Kara. Make yourself seen in the chat room. Everybody,
yay
welcome.
For the women. Yay for the women. Let's bring more women.
And
we have a
the
lot,
thing,
but we need more.
Karen, make sure that you check your email and that you fill out the form for the laptop, and you're in the raffle as well, okay, for the get together that we'll be doing in Manhattan or Miami. So shout out there.
So first thing, I would look into this company and make sure that it's right. Technically, it cannot afford another blink. This Head and Shoulders is so big, I'm not going to even tell you. Is this a SPAC? Because if it's a SPAC, I can almost guarantee you it's going to go to $10. This is the target if they lose this. Arguably, they already lost this. I think you have much lower to go. 30, 70, 35, 34, 35, if not 25. That's my target. So here's the plan, David. If you get a rally to here, expect sellers at 64. Okay? So I would expect sellers at 64 in this trade. So if you get a bounce and this gets you out of trouble, at least lighten up. Look at it. This is a neckline. This was a neckline. This is a neckline. Head and Shoulders this big. Head and Shoulders that big. Head and Shoulders this big. So all these targets are fair game. Whoa, that was a little bit lower than I wanted. Just had a spasm.
Nick, and Jeremy is asking here if you're also able to help in just buying and holding quality stocks.
Yes. If you need help with charts, we're pretty good with charts. So, all right, I did your DAC.
Well, okay, let's do it really quick, man. Look at Tesla. What would be the best level to buy or do a credit put spread there for people that are longer term? Buy and hold, or buy your credit put spread strategy.
For what?
For Tesla.
Tesla. Okay, so I did one yesterday. I'm going to give you a fun. Okay, let's continue with the learning. We're all about education, right? Let's continue. You're welcome, David. Thanks for being here 2 days. Let's continue with the learning, and I want to teach you what it means to actually sell a put. I'm going to preface it by do not sell puts in capitulating markets unless you actually really want to and are able to buy shares. Did you hear about? And the fact that you can afford them today doesn't mean you can, because you have to, like, if your account is already has a whole bunch of stocks and we have a market-wide correction, your margin might shrink with the market-wide correction. So then you think you'll be able to buy them, but not when everything else is going to hell, right? So it has to be an honest opinion. So I'm going to go to Tesla. And we're going to go to January. You said long-term. Let's look at Tesla chart. So what scares me about Tesla is that it's so high above the right here. It's 75% above the pandemic high. And look at how high the pandemic breakout was. This was an all-time high where the markets went crazy. And then we fell. And now we're still 80%, 75% above that. Amazon is down here. Facebook is down here. Square is down here. A whole bunch of great stocks are already down here. Tesla way up here. Apple is somewhere here. Microsoft is somewhere here. So all these stocks still have a lot of ways to go. If the S&P drops to 2,500, most of the extra sales will come from these stocks that have not given up their fat. Meta might fall, but it's already lean and mean. It's single-digit PE almost, which is crazy. Tesla is not lean and mean. It's a mean machine, but it's not lean yet. But it's not expensive either. So trading it on its own, it's falling into support at 265. It is conceivable that it's at 220 or 210. If it loses 200, I think it goes to 130, 145. So you need to know that this is a possibility. It is not my scenario, but it is a possibility. So let me show you how that could happen. This is I'm pretty sure you can draw. I'm sorry about that so quickly. A head and shoulders. So shoulders, head, shoulders. Technically, the drop is about this much. This should be as big as that. I look left and I say, okay, where can we have support? Clearly, this is a strong support zone. So I think they'll fight for the 200 line super, super hard. They have small support here too. They have excellent support anywhere below here. And volume support. Look at how much volume there is here. Look at how much volume there is here. So there's volume support here. This little cluster was heavily fortified. Actually, let me double check before I say that. Yep, I stick to that. Okay, so it'll take a lot to bring it down, and I think it will need the market-wide correction. Having said that, now we have big ticket numbers. So I'll go to the options table. You said, I want to get long Tesla now. You can do a credit put spread and collect money. How about this? How about if I tell you, would you take $1,100 today to get long 100 shares of Tesla at 193? That's a question for you, peoples. I'll give you no. Okay. Yes, yes, no. Yes, صادق. تحكي عربي؟ عنا كتير بيحكوا عربي. يلا تعال. Laurel says no, 187. Okay, 187. So you want to own it at 187, right? Okay. تعال عنا معلم نحكي عربي. أنا من لبنان. So the trade would be, if you're at 187, Laurel, that's pretty close. Check it out. So Laurel is a long time. So Laurel wants to own it at 187. How about if I pay you $1,000 to be at 187? Would you take it? Hi, Bonnie. Sure. And guess what? You will break even at 177. You won't lose money until it falls below 177. Yeah, exactly, Sadiq. I should get one of those keyboards. It looks so pretty in Arabic. Okay, so here's the deal. Here's the trade that Laurel just said she would do. what Laura would do, she said she would like to, she wouldn't mind buying 100 shares of Tesla at 187. So if I did this trade, I'm collecting $1,000 today, credit, $1,000 today, to promise somebody I will buy their shares at 187. If you want lower than 187, you just collect 800. If you would like to buy them at 223, you collect $2,000 almost, $1,900. And all you have to do is just sit and wait. Sit and wait. You wake up, you own shares, you keep your $2,000, you break even at $200, basically, give or take. That's how it works. So this is a trade that catches the falling knife and leaves plenty of room for error. Let's say you want to be cautious for now. You don't want to commit to buying shares like willy-nilly. So you do a credit put spread. These whacked out break even because it split all these. So this one you collect $185. If you do 10, you collect $1,800 and you win. All you have to do to win is to keep Tesla above at or above 220 at expiration. Now here's the kicker. So I do this with stocks I want to own. And if price comes to here, what do? I say, give me the shares. I'm totally cool with it. And I sell this one for a huge profit. If price is here, this $15 would be like $50. So I'll turn $1,500 into $5,000 and I sell it. And that'll and I sell the protection. I did this with the letter X. The letter X, US Steel, during the pandemic. Where is the pandemic? It started falling. I sold a $9 put right here. The stock fell under $5 and they didn't assign me shares. Luckily, I had also bought an $8 put, and that gave me thousands of dollars in profits, and they never assigned me shares. So then the stock rallied back and I bought my position back and I closed the thing. So yes, this is called the volume profile on the left. It's not available in the free version. You can add it.
Right. So Nick, and when it comes to trading around Fed events, I know that you're very familiar with this sort of trading, right? And whenever there are these types of events or earnings, right? Are you able to give these trade, because there are people that actively trade, buy
Yes,
calls and
I have a few people that love to trade earnings. So I try to give them as much information based on the options setups. The way the market makers put the orders in gives you body language on which way they want to go the next day. It's not foolproof, of course. It is still a coin flip, of course. I have proof for you that you cannot game which way the earnings are going to go based on how good the report is going to be. I'll give you an example. If you don't believe me, whoops. Let's go watch out. It's going to make me a liar. This is the earnings constellation. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9. In the last 10 reports, we had 3 green ones from Apple. 10 reports, 3 green. When have you ever seen a bad report from Apple? Right? It doesn't happen. How come they're not all green? So it's not about the report. It's about sentiment, feelings. People are so sensitive these days. Oh, blah, blah, blah. Anyway, it is keep it real. Interesting. What is this? Apple, October. There's upside pressure in Apple to get back above 140 through October. Same for next week. Maybe. I'll have to revisit that on Monday. Don't expect it to rally above 145 anytime soon without a change in the constellation. The best trade in Apple is to build a position for the earnings. It likes to run into the earnings. After a big dip, Monday, Tuesday, see if you can get into a cheap position for a cheap lottery ticket. And I would use November 11th or November 4th calls or call spreads. Okay, so let's take a ticker. We just did Apple. We just did Tesla. We did DAC earlier. Oxy. PTLO, I don't know it. I'm going to skip it. Maybe Oxy. Let's go. This is what we do in the chat room. Exxon and Oxy are basically the same one. Buffett buys at 50. Buffett is trying to buy the company. Para. No. Okay, so let's do Oxy, Adobe, and Nvidia, and PayPal. Oxy. So in the chat room, we have this debate all the time. Why is Nick hating Oxy? I don't hate Oxy. I don't hate it, actually. It bothers me that everybody's buying Oxy stock because Buffett is buying Oxy company. He's buying the cash flow. He doesn't want to buy to make money off the stock. We can't invest like a whale. So back and forth in the chat room, we discussed this, and we made so much money off of it. Shorting it, and Exxon. I can't remember if it was this. I think it was that. And I shorted XLE for us twice in the chat room and the live room, and successfully once. And the second time I mentioned it in the live room, and I took it myself, but it was too aggressive, and it won. It was under fire for a little bit, and it won, which is basically shorting Chevron and Exxon. XLE is heavy Chevron and Exxon. So look at this, and that's my opinion is on Oxy. If Oxy sneezes, it could be under $48. I know. Oh my gosh. No, there's no way. Buffett is going to, no. Listen, you're not Buffett. You're not Buffett. You are a trader who's trying to make money off of the stock price action. Buffett is a billionaire trying to buy a company so he can absorb its money-making abilities. So we're not the same. So this is a weekly chart. So it's a slow-moving chart. I don't expect this to happen tomorrow, but this is a head and shoulders brewing, and they may be drawing the right shoulder. Maybe they already did. Bottom line, if they lose the lows below 56 and they can't stop at 54 or worse at 51, I think it goes in the 40s, like the mid 40s. Technically, the drop should be as big as this, which is $14 or $15, so 30. So 45 is totally doable in Oxy, at which point maybe it's a good deal. I don't know. That's Oxy. How would I trade this? I wouldn't buy shares. And if I do, I wouldn't buy them all in. I would want to see what's going on now. So I'll go into 1 day. So this is the same chart on the daily. You can see the threat. I know there are sellers here. The only thing that could save it is a headline of Buffett saying, I'm buying the whole thing. So yes, theme of the crime. It's bouncing into prior fails. I think it'll sell off here. And I think if it fails here, it's going down to the mid 40s. So how do I trade it? I would sell a call spread when it goes to here. Or if I can't, I'm only allowed to buy things. I would buy a put spread. I can't buy a put right now because the VIX is so high. If you buy something, anything, calls or puts, anywhere, even if you get the movement right, you're going to lose a lot of money just from the actual deflation of the VIX. Fear. Let's say the market bounced and rally and you bought a call and you're not making money. You go, what's going on? I'm not making money. That's because the VIX is falling and the market makers are saying, we feel better now. They relax, so they start charging less, and your call is losing value temporarily. Okay, so Oxy is a short on rallies. That's how I would trade Oxy. Somebody said Exxon, same exact thing. And here's the problem for these two. So Exxon still gives 4% in dividends. Up here, it barely gave 3.3, and people still buying it. It was like, oh my God, you're going to be so toast. I can lend the government money now, which is guaranteed money, and they'll give me just as much reward as Exxon does. The TLT, the 10-year bond in the US, the treasuries, will give you 4% thereabouts. The TNX, that's how much it would. And there's no risk. The government has never defaulted. The I bond gives you 9 point something, up to 10 grand. Yeah. So there is an alternative to that stock. Snow is a small cap. We'll check it out in a second, but there are other stocks that they mentioned. Somebody mentioned PayPal. Let's look at it. I like PayPal. By the time I figured out what the hell was going on, I was like, what? How is this company being sold off like a company going out of business? It turns out that it and Square were falling with what? Da-da-da-da. Bitcoin. Look, they followed Bitcoin all the way down. Look at it. You can superimpose the two charts. I couldn't believe it. By the time I figured it out, I was like, what? People are that stupid. Because they're innovative and they have a Bitcoin element, they sold them down with Bitcoin. So I like PayPal. I think it's an investment for the long term. I prefer Square. That's what if you ask me which one I would own shares in Square and just forget about them, not calls. Selling puts to own shares every week also is a good good alternative. I would definitely do it. Look, that's when the world was closed. This is where Square is. Okay, Nvidia. Yes, you did mention Nvidia. I wouldn't touch Nvidia right now. Because here's, I look, what else can I do with my money? Nvidia is in the hands of the bears, has been, and it has special circumstances, supply chain issues, the whole sector, not just Nvidia. Head and Shoulders that has this much downside in it, almost there. This is a really solid consolidation zone. So this should be a floor. So from a trading perspective, if I get a rally, I would exit because I think there are sellers here. And then once they fall, how low can they go? If they hold a higher low, now I'm interested. But I want them to show me. Why am I not jumping on it? I guess you could. I urge you to not go all in if you're interested in Nvidia. That is not a bad place to be long Nvidia into these candles. This is a weekly candle. So that's a whole week. And they said, nope, not lower than here. So this floor is pretty good. In fact, I'm going to add it. Oh, it's right there. But you cannot go all in, please. Because if the market's correct, Nvidia will be 85 in a matter of a week, maybe 10 days. So don't be don't have too much conviction, because these stocks don't trade in the vacuum. If we have a 10% dip in the market still, everything will get cheaper, as cheap as it is. And Nvidia is not cheap. So it's a buy, but not all in, maybe 20, 30% size. And if it does rally, exit if you took it for a trade, because expect sellers, and then rebuy into this support with a tight stop. Because if you lose that support, you're going much, much lower. I don't want to say 60, but 80. When I said 60 about AMD when it was way up in the hundreds, I'm pretty sure I got people to call me crazy. Here we are in the 60s. Did it break 60 today? No, almost.
Right, Nick. So I guess Nirav says I'm stuck in Snow and Tesla. Both call for next week. Any price suggestions? And Nirav, just so that you know, you can do this literally the entire day. Manage the trade with Nick.
Yeah,
it's
so
not going to help you not get in these situations.
The fact that Nirav, thanks for that, by the way. The fact that Nirav says I'm stuck tells me that Nirav needs to add something to the trading process that they have. You shouldn't be stuck. If you're stuck, that means you don't have a method. You're winging it. Why are you stuck? You should have an exit strategy. As soon as you take a position, you should know, okay, I'm going to take 20% pain, 10% pain. You can't buy and not get out. You can't buy something without knowing an exit strategy that will get you out. And the exit strategy should be on the way down and on the way up. Like if you get today, when we caught a rally, I said, make sure to be realistic. If you catch a 10% win in a matter of minutes, remember that 15, 13%, whatever it is, that's the average return for a whole year, all time on the whole market. So these are great wins. So don't be shy about capturing small percentages. So if you had a win and you didn't book it and turned around, I'll use a real live trade. Oh my God. Listen to this. I've said for months, maybe weeks, I'm not touching Alibaba anymore. I'm done with Chinese companies. Yes, I do, Laurel. I'm not touching Baba. 2 days ago, I'll go to a daily chart. Actually, 120 chart, 15-minute chart. Okay, 2 days ago, right here, it opened down, and then James from our live room, he is very active. He is super fast. He posts his entries and exits. He says, I just got filled, and we usually know what it is, and I'm out. I'm going this, I'm waiting for this, and I'm out. Watch out for the test of VWAP, and I usually explain what that means. And then, so he offers a lot of guidance throughout the day. He posts charts that are pretty good. And we have the other guy that posts mostly bearish stuff. We have a few other people that post other stuff. So we have all kinds. But anyway, this made me a lot of money, him. So we wake up, we go into the room, the bell rings, and he goes, check out Alibaba, Monster, or whatever he said. I was like, I'm done with this stock. And then I pop in, I was like, And then I go to one day, I was like, So I got enticed because this green thing says that Alibaba can be 3 digits in the next, I don't know, 3 weeks or so. Don't buy Alibaba based on that. I got enticed one more time. But here's what happened. I got long Alibaba, and they said, what are you going to do? I said, I want 3 weeks on the clock or so. So I posted my entry. I bought the $79 call for October 21st. So I chose October the monthly, and that's the 21st, Baba. And this one. And I said, I want to buy the $79 call. Okay, this is the lesson. Listen, this is going to be a lesson about calendars and diagonals. So spreads. So where is it? Trade it. So this is the call I bought. And then this happened. I got 48% in minutes, maybe an hour. We got 48%. Not just me. Everybody bought something. They all got between 25 and 45% in minutes. He got out. I said, you know what? I like the daily chart. I'm going to lock my profits. And somebody said, how do you lock your profits? I said, I'm going to sell a diagonal. So what did I do? I sold the $83 call against my longs for the week that just expired. Sorry. Calls and calls. I'm so programmed to buy things that are falling. And let me shrink this to 10 and show this. Okay, so I bought the $79 call, and the market rallied. And this call, I was wondering the numbers. So I paid $4 for this. It's now $5. So I'm already up $100. But this was $570 this morning. And 2 days ago. So what did I do when the stock price was at the top? I sold this, and I collected $50 for every contract. So I paid $400 for every contract, and then I sold this that died in my favor this today for $50. So in essence, I paid $350 for a call that is still $500. So I have $150 of profits in here and the money I collected. So I'm sitting pretty, waiting for a huge breakout. And it wasn't even my freaking idea. How beautiful is that? I couldn't thank him enough. I thanked him again today. He got out of the trade. I offered this strategy. This is called it's a spread. When you use 2 legs, it's a spread. One is shorter time than the other. This one that I sold expired. So let me explain this. Usually I said that you can buy a call and you can sell a call, right? It makes it a spread. So that is a debit call spread. They call them verticals because they're in the same time period, October 21, verticals. I didn't do that. I bought this one, and my spread, I jumped calendars. I went in 3 weeks earlier, and I didn't sell the 79 because I knew that would be a mistake. I gave it room to run a little bit more, and I sold the 83. Had I sold this one, that would have been what? Anybody? What is this called? Someone. Okay. 1, 2, 3. This is called a calendar. No, calendar. Shabir. Nice. It's called a calendar. Why? I bought a call out in time. I sold the same call shorter time. Calendar. Now, if I do that and I move it up, now I made it into a diagonal. Let me show you why on the chart. Oh, there it is. There they are. That's the call I bought. That's the call I sold. Why is it called a diagonal? Because it's diagonal. This would be a calendar. Diagonal. Vertical. Yes. So this trade won, and I'm in the money, and I expect it to go to here. Yes, up there. But I have 3 weeks. Let's see. The sold call is not going to get assigned. It died for maximum gains. I picked it right. I picked it like a market maker. They're designed to die in my favor. There was a small odd chance that price would rally too far, in which case I would book my profits. I would have not ruined. I would have limited my upside potential. What if, though, you don't get assigned during the market open?
Hey, really quick here,
you don't get assigned.
Nick, want to give a shout out
But
here.
wait, let me answer this. Let me answer
quick
this.
shout out here to Jerry, newest member of the Options Inner Circle chat room. Let's go.
Right on.
Welcome.
So let's address Ricky. Ricky's concern is by the way, I own this call, friend. I'm long at 79 if I want to. I am only short at 83. So yeah, if they call me on me being short at 83, I own them at 79. That's my profit. I'm out. I'm a winner. That's not going to happen in an open market. If I let it close up here in the money, then maybe they assign me. So listen. So when I sell a call, I'm committing to deliver shares. And Ricky correctly says, hey, if it closes above 83, let's say today Alibaba closed above 83 and I'm short that call, I'm liable to deliver calls at shares at 83. He says, where are you going to get those shares? From here. I own a call at 79. So I'll say, if they assign me this position, I'll call the broker and say, exercise me here. I'm out with profits. In reality, you will close it before it closes. Before a market closes, you close the whole thing for a big win. It wouldn't be perfect, but you made money. So it was a no-lose situation for me. It was a no-brainer, an absolutely no-brainer. So I did it. Other people closed out of their positions and booked their profits. I said, I still like this trade. So after this disaster week, and I'm still having profits with that trade, I'm very grateful to James for having brought me back to Baba in a good way. No, they're not calendars. They're not good. Diagonals are better because the earnings are so emotional. The calendars could really mess up your trade. However, the diagonal, the earnings, the important part about the earnings trick, how to do well with the earnings, is to look at stocks that have difference in implied volatility. Okay, lesson time. Lesson time. Right. So here are the columns that are important to me on the options constellation. Clearly, we have price. So I want to see open interest. Open interest is how many contracts did we have here when the market opened? That's we woke up. This number is there. This number does not move. It's static. Then we have volume. This number starts with 0 in the morning, and then volume goes all day. Transactions, buy, sells, buy, sells, buy, sells, buy, sells, buy, sells. On Monday, these are dead. No, they're not. Yes, these are dead. That's 9:30. Those are gone. Those won't be here on Monday. These will click back to zeros. And these will change based on what happened here. Okay. And it's not always incremental. Like it's not 295 on Monday because some of these are swaps. So those are two columns. These are the two columns that are important. This one is important on earnings. Why? This is basically how nervous the market is about this particular stock this particular week. How nervous for October. So when we come to earnings, this number is so high for the week of earnings. Yesterday for Nike, it was 3 times more expensive than normal. So if you went to buy a put or a call for this week for Nike 2 days ago, you would have overpaid more than 3 times the going rate. As soon as the bell rang at the open, that premium disappears. So the diagonal will suit you very well, but that's a longer conversation. The short answer is I don't do calendars into earnings reports. I would prefer to do a diagonal. Okay, what else do we got? Let's see here. Baba, Nvidia, we did PayPal, I threw in Square, we did DAC, we did Exxon, kind of Oxy. Give me another ticker. Yes.
Nick, let me ask
Adobe.
you a quick question.
Shabir asked for Adobe and Palantir. I'll do Adobe and Palantir.
All right, but definitely at one point we definitely have to look at Bitcoin and ask ourselves the question.
Oh yeah.
10K?
Yeah.
10K or 5K? I don't know, Nick.
Either way, I'm in. Okay. So Adobe. I don't like the message from the company. They seem to not be excited about their own business. The company is good. It is financially healthy. It makes a lot of money. There's no, as they say, hair on this P&L or financials. There's no doubt in their value. So in fact, I need to add them here. Come on, are you kidding me? Okay. Here, Adobe has had a head and shoulders up here. So that was, let's say here, dude, 226. Oh my God. So this head and shoulders target is still lower than where it is right now, which will put it back down to here. So I don't know if they plan on stopping on the pandemic bottom. I plan on going long it into the pandemic bottom because that's just sheer panic. I don't know how I missed this. So how would I trade this? I would sell a put spread way down here, way out in time, and just let time do the work. When people are panicked, I would sell them fear. So the idea is to profit from other people's over concerns. The P&L is outstanding. The growth is still there to a degree. So I would rather bet up, but without needing up. So let's go to Adobe and see if we can give you an idea of what I would do with it. And this
really
again,
quick here,
is not a trade recommendation.
Really quick, PJ Jakarawa 81. Welcome to the family. Let's go.
Okay, so this is the kind of stock where I say, you know what, screw it. I'm committing to January and get me in at 200 and give me $500. So that's what I would do. If I wanted to sell a put spread, I would sell a put spread. If I do 10 of these, I collect $500. I'm in for 112 days, but that's a trade I don't have to worry about for a long time. Or if I wanted to own shares, I would just sell these and collect, $500 per 100 shares I want to collect. So if I want to own 1,000 shares, I can, collect $5,000 and not even need a rally. You can choose that level on your own. Like if you want to get paid $1,000 to buy 100 shares at 230, you can do that. If you're committing to 230, which is this, somebody will pay you $1,000 today to promise you buy their shares at 230. I would do that all day. personally, because I don't mind owning shares of Adobe at 230. Let me look at the value. It's not cheap, I know that, but it's never been cheap. It's not that bad. It's 7 times sales, not cheap, but definitely better than other competitors. And it even has a low PE. Look, that's the lowest PE it's had in a long time. Not visible since, oh, these are quarters. Let's go to annuals. Where are we? Price to sales, 7. It hasn't been this cheap, maybe 2016 and 15. The PE, look, 27, that's the cheapest since 2015. So it's not extravagant, and it makes, I believe, $1.5 billion in cash from an operation. So pretty healthy company that doesn't need debt in a rising rate environment. So there's nothing wrong with it except broken technicals. The chart is broken. I can't believe I missed this. Anyway, there might be a good opportunity for Adobe. You keep asking Apple which way. I answered Apple already in details. Let me see. USO, PXD, Penn West, Coffee, Palantir. I know I promised someone else. So I'm long Palantir shares. I'm short a put at 8, but actually I shared both of these with the group. The shares I'm down on for sure. I think I bought them at 10, 10.50. I can't remember. But I don't care. I bought a starter position. It's an investment for the long term shares. In fact, don't hate me. I'm like Buffett that way. I hope it falls to 5 so I can triple. Okay. But I don't want it to fall to 5 because a lot of people are invested in it and they'll get frustrated. But it's like Buffett was right. I love this. I'll buy way more. How well did it do this week should tell you how lean and mean the stock is. People complain about it. I think they're missing the boat. I'm a believer. So here's Palantir. So I sold a put spread in Palantir at 8. And let's go visit that put spread. It's losing money, but not really. And I'll show you why. Why is it doing? See why I don't like this platform? I just typed Palantir. Nothing happened. I believe I sold the October. So I sold this spread right there. So I'm losing money. I collected whatever I collected, less than what it's worth right now. I'll show you a visual of the trade. And I'll tell you how I would defend it. So let this be a lesson in the live room on how we defend. This is where I'd say, okay, we have 280 people. Listen up. Get your pads and pencils. So I did not collect 31 cents. And now it is worth 31 cents. So I'm losing money in theory. But I'm not going to defend it. Why? Somebody said, what would you do if you get assigned? I'll take the shares. So if I wake up, where's Palantir today? 8.13. Yeah. If I wake up owning shares of Palantir, I would sell this for profit. So then I would break even at $7. What? Yeah, sign me up. Okay. And I still have room to triple my position before I can get to my original size of, I didn't go all in. Let's say I wanted 1,000 shares. I only did 300. These are not the right numbers, but I'm giving you as an example. Okay. Sorry. So Palantir, I like the company. And here's what I think people are missing. I missed that same boat with Roku. I was wrong about Roku all along. I was complaining about Roku. You've been in business for 16 years and you can't even make money. And suddenly, boom, making money hand over fist. It turned out that they were so early that they needed to establish the market before they became profitable. They were all about streaming, and streaming was not the thing. And now everybody streams everything. So now we're all playing in Roku's playground. Suddenly they're making money. AI has been, funny thing, right? And now every company needs AI because there's so much data. After the COVID, after the pandemic, everybody went digital. So now they have so much data that the market is coming to Palantir. This week, they announced contract over contract over contract. If you're not a believer in theory, how about a believer in actual numbers that come out of the company? So the P&L is 1.8 billion, 1.8, 1.9, 1.9. Wait, no, never mind. Quarterly, let's go to annual. It's easier to look, and then we'll drill down. Revenues exploding, 1.8 billion trailing 12 month. I think this doesn't count the 2 deals they got, which are not in there anymore. Consistent revenue growth on a quarterly basis. So it's not like a yearly number that's tapering down. That's pretty decent still. Okay. And then net income. Oh my gosh, they're losing so much money. So then this is where I go into, are they bleeding? And I look at their cash generated from operations, and it is positive. So they're not borrowing, they're not burying themselves, they're creating their own cash, is the way I think about it. So if they need to grow in a rising rate environment, unlike companies like Carvana that needs to borrow to exist, I wouldn't be too worried about it. So fundamentally solid. Leadership is proven, and it's hated. People, the biggest gripe about this company is that their leadership is paid too well. Who cares? And by the way, this is an inverse Head and Shoulders. I'm going to say 9.75 plus. Eyeball. These are notes to myself, so I don't care. Let me see here.
Nick, and after this, if you don't mind doing just a recap for the members that join here on what to expect for the Sunday session, because it's going to be their first Sunday meeting in about a day or two here.
Absolutely. So on so about 2.5 hours ago, when the market closed and I said goodbye to people in the live room, which by the way, every once in a while we pop in and do a game of Wordle live. We haven't done that in a while. I should go back to it. So I shared a form and a write-up saying what happened, that was pretty bad close. And the form is, give me the tickers that you want me to do homework on. And you give me your tickers. And I spend Saturday tabulating this nice little sheet. And sometimes it's 180 tickers, sometimes it's 150. And I enter all your tickers alphabetically. I'll post links to the pictures, corresponding pictures, and with my comments. And then Sunday we'll get together at 7 a.m. East Pacific, and so 10 a.m. Eastern, and we will go through it live and record it in 3 separate videos alphabetically. So if you don't have time to join me live for the free webinar every Sunday, you have the opportunity to watch it somewhere in the afternoon, because it takes a little bit to produce them and post them. Now at night, I spend another hour doing homework to do another 10-minute video, 8-minute video to strategize the week. And like, this is like the most important part of my week for me. I need to go into the week having an idea of what I think needs to happen, and what would I do if this happens or that happens or this happens and that happens. It's a strategy. How can you go into a week trying to trade successfully when you're just winging it? You need a strategy. So that's what happens on Sunday. I'm running out of energy, seriously. We're coming up on 2 hours. So how are we going to wrap this up, Rod?
Really quick, before we do get into that, for the folks that are emailing about joining, make sure that you do it while we're live so that you get the bonus trade alerts and the bonus strategies separate from the chat room. You'll get them for free if you join live. Now, after Nick wraps up here, I'm going to stay for a couple minutes showing the live room, especially for all the folks that did sign up. We'll do a quick walkthrough, right, so that you know what to look for and all that sort of stuff. Anybody's welcome to join. We'll show some videos from Nick, all that stuff. So yeah, just make sure that you're there as well for the Sunday session. Sadiq, what are you supposed to do to join? There's a link that we have been posted in the chat. I'm going to post it again for you. And just make sure that you do it. If you do it while we're live, you'll get all the stuff we went over, everything. But the laptop might expire at midnight. We might run out. So just make sure. Fami, I got your number. I'll give you a ring after the session. So Fahmi, just use that link. Yeah.
Fahmi, join. I think you will like it. You'll be among friends. I promise. I promise.
Yeah, and look, guys, if you're trading alone, like just cut it out. All right, hear me out. Just cut that out. We're doing you a favor. Cut out the news like CNBC, all that. You need to be in a group of like-minded individual traders that are working towards the same goal, helping each other out
Li-
on the same boat.
listen to this. I've been with Benzinga since 2011, I believe. I've always been the first at doing this and doing that and doing this and doing that. I joined Benzinga because nobody else was doing credit spreads. And I had a channel doing credit spreads, and it's been going on and morphed into what we have here. I added the chat room. Nobody had a chat room. Now everybody has chat room. And then my final edition, the live room. I dare them copy me. Yeah, they can copy me for 10, 20 minutes a day, an hour a day, 9 freaking hours a day. I go on. Where is it? Hold on. This stuff gets me going. 9 hours a day. That is me dedicating myself to helping people. I promise you, I love it, and you will feel it. And every once in a while, if I get off course, I have 300 people to remind me, hey, can we hone in on this or that? The outcome is really just a collaboration, meeting of minds. I just showed you how I made money off of somebody else's idea, and I shared it. It's not like I took the idea, I ran with it. I took the idea, put it to work. Somebody says, what did you buy? I said, I bought this, I bought that, and I sold this against it. Debke, I don't know how to edit book, Malim. Nor do I like the nai. It's pretty loud. If for some reason it just goes into my ear the wrong way. But I'll watch it. You can dance and I'll watch you.
Right. And we didn't really even mention a lot of this, Nick, but there is a ton of technical analysis education that goes on. Like everything we've talked about are key levels, technical. So it's just really hard to put it, everything you do in the room in kind of one sentence. You know, it has to be like freaking 20 bullet points of everything.
Yeah.
All right. Boo Boo says, I just joined 5 minutes ago. Boo Boo will be sending the recording out there later to the members.
Boo Boo? Babu.
Yes. Right. All right. So Nick, I mean, how are you doing? I know that everybody here is feeling the energy. Look, it's a Friday, guys, like Nick works like 50 hours more than that, like live with you guys. So Nick, it's up to you. He's
I'm tapped out. I'm literally tapped out. So I think we gave it a good go. Bonnie, thank you. Laurel, one man band. Yeah, I appreciate the conversation. Here's the thing. Here, I'm going to end it with what I started with. I promise you, you will be a better trader in my group. I promise you that. I guarantee it. And guess what? If you don't get it, if you don't feel it, and you have 30 freaking days to decide, they will give you your money back. I mean, there's no more honest. And think about it. Okay, it's a lot of money up front. It's a sum of money, but it's not a lot of money. Go out and price any other course that lasts a year with 9 hours of classroom every day. I guarantee it, there's nothing close to it for less than 10 grand. And if there is one, I don't know of anyone that's open 9 hours a day a whole year.
They're not. They're not. And I know because I hear the horror stories from the other members. Like, thank God I found Nick. Because,
I'm on record every day, writing stuff up, discussing stuff. It is as honest and as an open book as it can be. I mean, seriously, the money sounds like it's a lot, but if you're serious about being a good trader, I think I have a clear conscience that you will find value in what you're paying into. Molto grazie.
Right.
I don't know how to say you're welcome.
So, okay. So on the Sunday session, folks, for all the people that are joining the Sunday session for the first time, just let them know. Well, you will find the form in Nick's chat room where you can put in the tickers, right, Nick?
Yeah. Yep. I posted it in the chat room. It's just sitting there. You can go into the inner circle right now. You'll see it in 2 places.
Right. Nick says that you're a great teacher. All right. Well, I mean, Nick is amazing. I'm telling you, I learned from him as well. But he's tired. He's got to go unless he's got anything
I
special to add
I
here.
appreciate you, but I got a bolt. I'm definitely toast.
All right. Well, Nick, I appreciate your time here, man. All you do here for the retail folks. I'm gonna stick around and show them where where the magic happens. All right.
I got
So
Bonnie. I got Bonnie.
Bonnie's
Yeah.
in.
Well,
All right.
I can't wait. We'll chat later. I'm toast. Later, Liliana. Later, Laurel.
All right. All right. All
Carla.
right. Nick,
Later.
great
Bye.
stuff, man. Shout out to Nick Chahine. That shout out was for Nick Chahine, so everybody knows. But I do have a special shout out, of course, right, for a couple other people here. And because you guys joined live, Bonnie, all the other ones that joined live while we're still here, okay, a couple of things. You do qualify for the bonus trade alerts and strategies from Nick Chahine that are separate from the chat room. You also get entered into a raffle that I'll be giving out one ticket to our next event. It's gonna be in Miami or Manhattan. It's gonna be our chat room get together meetup. It's gonna be at a nice hotel, cocktails, everything. We did one in Vegas this year. It was pretty insane in a good way. So everybody that joins while we're live automatically gets entered into that raffle. Okay. Now, a couple shout outs here to our newest family members. We got Belias 999 and Hichioneri. Welcome to the family. Let's go. All right, folks. So let me just show you how this stuff works out, especially for other people that have been joining here throughout the live session. You still have a chance to join while we're live here. So as soon as you join, a couple things, right? Let me pull something up. Ooh, all right. Yeah, we're just getting started here. We're going to show you guys a couple tips and tricks for all you guys that have the chat room as well. Okay, so as soon as you sign up, the first thing that I would do is go to your inbox and make sure that you fill out the form with the address where you're going to have, where we're going to send the laptop to, right? That would be the first thing that I would do. Second one, make sure that you go into the Plus site. You're going to get a welcome email with that info. If not, just shoot me an email. It's fine. Once you get in there, right, you're going to select here Nick Chahine on the left panel, and then you select chat, or you can just go to the header. Hold up. Right here at the top, and you can just select the chat. Okay. Now, once you get into the chat, there's two things that are very important to know, right? Besides these sound alerts that you have, these bells that I'm right here, you have two channels. This channel, the Inner Circle chat, is where everybody's posting, all the members, Nick Chahine, back and forth, three-way street there, right? That's where a lot of people pretty much interact, right? This is the 24/7 live room. It's open the whole day. It never closes. It's an international community, so we have people from all over the world, basically, that are in this chat room throughout the whole day, okay? Right now, I can tell you, there are 122 users online, like exactly, with this chat room open. Why? Because it makes them money. It's that simple. So here you can use it to come and talk with Nick back and forth, all that sort of stuff. The second channel, it's called Nick's Important Messages. Only Nick is able to post there so that it's very easy to find the trade alerts and all that stuff. Now, once you get in the morning, well, right now, actually, today, now that you joined, go to the bottom of the chat here where you can see, give me your tickers here in this link. This is where you're going to put in your tickers. Let me go ahead and just show you really quick. You put in the tickers request. Nick will review those live on the Sunday session, which is from 10:30 till 1 p.m. Eastern. Basically, that's an extra bonus that you guys have if you sign up live, right? Having full access to all the meetings, all the live rooms, all the sessions, all the features that we're discussing here, right? And if you already have Benzinga Pro, don't worry. I can still hook you up with a deal. You have to make sure to email or sign up and email me. I'm still gonna, give you some courtesy because you are part here of the family already, right? So it's not welcome to the family. It's thank you for being part of the family, right? So, okay, now this is where you go for the tickers on Sunday, right? That's where the session is on Sunday. On Monday, once you log in, you're gonna see this post, this type of post. You're gonna see this type of post in the morning. about 8 to 8:30 a.m. Eastern. And you will see this link, which is very important, called Live Session. This link will take you exactly to the live room, which is live Monday to Friday, 9 to 5. Okay. Difference between this room, the blue chat room, static 24/7, and the live session right here, which is 9 to 5, Monday to Friday, and the Sundays, right? Also, every morning you're going to have the SPY, Qs, and IWM filtered out. I don't know if you can see my cat's kind of displaying there in the back, but you're going to get these indexes charted out. A lot of people do credit put spreads, iron condors, and the Qs, or they trade the SPX, which is from similar to the SPY. So having this charted out very early in the morning gives you a good sense, really, of what to expect for the day. Let's just go ahead and open the Qs to see what's going on here, okay? A lot of people that I know in the chat room that have been with Nick, just by these levels, are able to set up the trade. As you can see, the levels of resistance have been pointed out. And, well, what do you know? What do you know? This was posted at 8 in the morning, right? All these hard resistance levels broke the support line, and, well, you all, everybody here knows what happened, okay? So having this in the morning is so important. So important. No, it's not a Discord channel. No, we have our own platform, basically. But let me post the link for you there really quick. Hold up. Okay, all right, let's close this chart now. And just want you guys to more or less see where you're going to be able to access the live session for tomorrow and also the Sunday session. The link to join the Sunday session will be posted in the chat room as well. And you're also going to get strategy sessions and videos from Nick Chahine that he will put in his in the chat room itself, right? The other thing, very important, is the education side of these things. These are Inner Circle member only access videos. This is Nick Chahine's private library when it comes to education and really getting started. It's basically like a beginner's must, right? A beginner-friendly, beginner special videos, right? And it explains everything from basic calls and puts to spreads and condors and butterflies, what they are, when is the best time to apply them, and why we trade the SPX instead of the SPY, basic things on definitions of calls and puts. Like, for example, this one, what are options and puts? Very important to know that. There's quite honestly, there's a lot of misinformation out there with all these marketing gurus out there. You know exactly what I'm talking about. So it's very important that you can actually get the raw information without complicating anything from a professional options trader like Nick Chahine, okay? Laurel, we're posting the link in the chat for you. 1 second. All right, use that link that we're posting in the chat to join while we're still live so that you get all the pluses by doing it live. There is also a 30-day money-back guarantee. I'm getting that question a lot. Yes, it is 30 days. There's no strings attached. It doesn't have to be on a Wednesday while it's raining or nothing like that. I've seen some of these refund policies on the fine print by some, I wouldn't even call them competitors, but you know what I'm talking about. And it's just ridiculous. I mean, you might as well not even give a money back guarantee if you're going to make it so damn impossible to get your money back. And I've read through their fine print and it's just insane. Like, asking you for your P&L and things like that. But yeah, look, there's a lot of things out there that I personally don't agree with. That's really why at Benzinga, we really try to do everything the way that I would like to, like if I would be a user trying to join, So that's pretty much like my approach with this stuff. You've ever seen that commercial from that credit card Discover? This lady calls customer service and she answers her own call and she hooks herself up. So that's more or less the way that I think it should be, where you should, treat users and members the way that you would like to be treated as a user. And that's why the money back guarantee has no strings attached. There's no fine print like all these other places have. If for any reason, if you don't like it, for any reason whatsoever, it doesn't matter, right? You get 100% of your money back. The only person that loses is it's us, because we're paying all the processing fees. So basically that's just to show you how confident we are with this. So know the definitions, get the education right, super important. Then what is a spread? You need to know what's a spread because we do several of them. We do credit call spreads, credit put spreads. We do condors and butterflies and different types of trades. But knowing what is a spread is very important. And it's only a 10-minute video, okay? Now, the second one here is call options, definitions.
Hello, folks.
Oh, Nick's voice has changed a lot. We're going to listen to this one later. But knowing the call options, definitions, and uses, super important because sometimes you'll do these credit call spreads or selling covered calls, that sort of stuff. So really important to have that down. This is the moneymaker, credit put spreads. It's a bread and butter. Nick loves it. It's his favorite thing to do. And there's a reason why he likes to do that, but he doesn't do it with every stock. Not every type of options trade is going to be applicable for every stock that you're trading. There's going to be times where it's better to do a certain type of trade than another type of trade. You just have to pretty much know when to use each one. And we have a video for that, and I'll show you here in a little bit. When and how to book, when to book or set a stop loss, managing your losses, very important. And just as equally important is managing your profits, right? So we have one session here on booking and setting a stop loss. And then we have another video here on when and how to book profits. There's many traders out there that they might manage their losing trades, but they don't manage their winning trades, right? That well. And we have traders that are on the opposite side of the spectrum where they might get some good trades here and there, but they might not even manage those winning trades to the point where they lose any profit and it becomes a losing trade, and then they can't manage the losing trade, and then it becomes an account, it could lead to account destruction if you don't know what you're doing. So trading by yourself, I mean, it sounds great, the freedom, right? Doing it, like, I get it. It sounds great that you can do this by yourself with no help. It sounds great, right? Like on paper, right? But then in real life, you'll figure out that it's totally different. If you haven't, I've talked to about 10,000 traders here at Benzinga, and I can, about their trading experience and all that stuff. And, if you don't know if you're new to options and you're trying to figure this out in such a like bear market, if you want to call it, in the middle of a recession, and you're trying to wing it, you're not making the right moves there, my friend. So all these videos are going to help you understand options with no complicated terminology or anything like that. A lot of these brokerages, they'll give you these education videos, whatever, and ultimately they'll make it as complicated as possible so that they can refer you to their financial analyst, right? And you could just give them all your money and they can do everything for you, and you'll just see the statements once a year, basically. So it's not that complicated, guys. Everybody here can do it. All you guys can do it. You just need the resources, the information, and the live instructor that's with you Monday to Friday, 9 to 5, which, I don't know what's the last time. I've never in my life heard of anybody giving users for anything, for nothing. It's just, I've never heard about anything like that. So appreciate that you have it, that you have that instructor, all that stuff. So those are risk management, those videos. And below here, what type of trade is best, and learn how to pick what type of trade to buy. These are very important, folks, because a lot of people, if you're trying to get into condors, butterflies, spreads, very important to know these videos. So I think that covers most of the stuff here. Let me just make sure that if anybody does have questions before we do finish the stream, let me know, put them in there. And we can watch a quick little video here from Nick. Okay, give me a 1 in the chat if you guys want to watch one video from from Nick's private education library. And which one you think would be a good one, because there's a ton here. All right, Benjamin Bellotti. All right, Bellotti, we're going to show you here a quick video from Nick. Let's see. I'm going to do this one. What is a spread? Bonnie, if you're an Inner Circle member, you should have access to these videos, but send me an email. I'll put the contact to get you set up with that. Okay, all right, let's get this video started here, folks, all right?
Hello, folks. Nick again. Another installment of options.
I don't know if he's sick there or if his voice changed, but I promise you that's Nick Chahine.
What are they? Calls, puts. How can we use them?
I think he was sick that day.
And right now, we're
right.
going to tackle
All good?
what is a spread. So if you haven't done so, watch the side that introduces options in general and then concentrates on puts, and another segment that concentrates on calls. And this one will take the knowledge from each of those two. So if you haven't seen those other two, you should, and put them together to make a variation on the single leg idea. So what is a leg? We are looking randomly at Home Depot. Doesn't matter what period of time. We have them for every period of time. Remember quickly that they are contracts and they have a term limit, usually a number of days, and they are between buyer and seller. And when I say single, this side is puts right there. This side is calls right here. And when I say a single leg, it means one leg. A put is a single leg right there. Visual. If I switch it to calls, it'll be a single leg right here, single leg. So today we talk about, in this segment, not today, having not a single leg, but rather a spread. So just like the name makes it sound like, it is two things. And there's a difference between the two. So they're not the same level. In this case, I'm just talking about a put, spread, and I'm going to spread it out a little bit to make it more visually appealing and easier to understand. In this case, we would be buying one leg, one put, selling another put leg at a different level. In this case, I chose randomly the 255 put and the 245. So in this case, I'm buying the 255, it's green. I'm selling the 245, it's red. By the way, this is not a trade recommendation. This is just an illustration of a point. Pick this stock randomly. I don't know if it's a good time to do that or not. So this is definitely not a standalone trade. So what does that mean? It means I'm spending money out of pocket. And in this case, it's $4.60. It's right there. And I'm also at the same time collecting some money by selling something. And it's almost $3, 2.8 right there. So the net effect is a spend, a debit of $1.80. That's 460 minus 280. So $1.80. So now, instead of spending 460 by buying one put, I'm spending less. I'm spending 180, way less than 460. And I'm buying a spread instead. What's the advantage and what's the disadvantage? All right, so the advantage of it, clearly less money out of pocket. Another advantage is if I have a bad day where price goes against this trade, the effect on my overall pocket is less. So if I buy the put all by itself for 460 and then the stock rallies the next day, that 460 loses value right away. It probably drops 20%, 30%. Whereas if I do this spread, it only drops like 5% maybe. I'm estimating because one leg loses, one leg gains. If a stock rallies, this one gets better in my favor, this one gets worse in my favor. They wash each other out. So that's the advantage. Less out of pocket, less risk, because less money at risk, right? That's risk. Money out of pocket, that's risk. So what's the disadvantage? Why wouldn't we do this all the time? Because if I'm buying the put spread in order to short the stock, then I'm capping my potential gains. What does that mean? It means I'm spending $1.80 to own a $10 wide spread. What does that mean? 255 minus 245. That's $10. So let's say the stock goes to zero. I can only make $10. Actually less, because I spent $1.80 to do that. So round numbers, $8. That's my potential profit. So if I'm buying the spread to protect my portfolio, the maximum protection is $8. Mind you, this is 4 times what I spent, so it's not too shabby, right? So it's a good trade if price goes to 0 or it goes to 245. How do I win? I need price to go through both to get my maximum. I need it to go at least to 245 by the allotted time in order to profit maximally. So if price falls fast, this $2 turns into, say, $4 or $5, I can just book it. How do I book it? I just sell it. I'm buying it here. I can just turn around and sell the close. See, I switched it. Now I sell what I bought and I buy what I sold. And the difference then would be, if I made a profit, I collected $4 to sell it, then I made a profit of $2. If time ticked and nothing happened and I sold it back out for $1, then I lost 80 cents per contract. And remember, each contract, so I'm doing one quantity, is represents 100 shares. So this $1.80 is in effect $180, and I'll show you. Debit. I'm spending $180. So how much can I make? 800 and some dollars. So $820. Okay, so not a bad deal. 4 to 1. That's pretty good trade if price goes my way. That's my ideal win. So somebody that bought the put naked, the 255 put, they spent $460. So what's their maximum profit? As long as the price is falling, I'm making money, right? However, there's a downside. Any upticks, if the stock rallies or jumps up, boom, I'm losing money right away. Actually, this is the right spectral analysis right here. Okay, so there's a drawback to doing spreads, but the point of this video is to explain what a spread is. So again, it's a set 2 legs instead of 1, and it can be $5 wide, it could be $10 wide, it could be excuse me, $15 wide, it could be $20 wide. I don't like to do those wide ones, especially when I'm selling. So in this case, this is a debit put spread. Debit put spread. I'm going to introduce something else called the credit put spread, and it's exactly the opposite. See how I flip the colors? Boop, boop. So what is a credit put spread? I'm going to use the same lines so not to confuse anybody. Instead of buying the 255, I would sell it. And instead of selling the 245, I would buy it. Why would I want to do that? If I'm bullish the stock, that's what I do. You've heard it called bull put spread, credit put spread. It's the same thing. Bull put spread, credit put spread. And I'll quickly do it here, but I'll do a separate video on that. What's the difference? Remember how it was money I spent? The order for me to open this trade is credit I receive. What? Yep. Instead of paying $180, I'm collecting $180, and time is on my side. So if nothing happens, I win. What do I win? $180. That's my maximum win. What's my maximum loss? The difference. Remember how if I bought the spread, I could make $800? In this case, I could lose $800. I know the math sounds wacky. Trust me. Watch the credit spread video. You'll get it. It's a sweet deal if I know where to place them. Okay? All right, so again, the spread is 2 legs. Can it work on the call side? Absolutely. I can buy a call for 275 at 275. Let's do that. And spend almost $800 for one contract. Oh my goodness. Or I can make it a spread and spend almost under $4, $3.50. So now what's the difference? First of all, I have 2 legs, therefore it's a spread. I'm buying one and I'm selling one higher. So I'm spending $800, I'm collecting $400, I'm spending less money out of pocket. If we have a bad day and the stock falls, having bought a spread loses a lot less and a lot slower. Whereas if I just bought this one all by itself and then the stock fell, I would lose a ton of money just in a few ticks, a few hours. So buying spreads makes better sense. Okay. Now,
here too, they can sell it and collect a credit. I'm not going to cover it in here because it just gets a little dangerous, and it's basically shorting stocks, and I'm not all about that right now. This video is to explain the difference between a single leg and a spread. Are there other types of spreads? Yes, and I'm just going to introduce one and then not talk about it. But I want you to know that there are spreads, all kinds of spreads, maybe hundreds of them. And I'll show you one visually here. So let's see here. There we go. Here's a spread that crosses time. It's a time traveler. I'm buying one in February. I'm selling one in January. This would be called a calendar spread. So spreads can be all kinds of different ways. They don't have to be in the same period. The one we attacked today, the one we went through today, is called a calendar spread. A vertical spread, because just like the name insinuates, it's vertical, up, down, vertical, up, down. It doesn't jump time. It doesn't go sideways. It's just up, down.
All right, I think that video finished. I'm getting here to a couple of the emails from.
Hello, folks. Hey, Nick again.
All right.
Another installment, traders of options.
Okay, chill out, Nick. So I was answering a couple emails from you guys. Karen, I got you back on the email there, so let me know if that works for you. Bonnie, we'll talk after the session, make those adjustments for you. Richard, I'm going to talk to you shortly as well. I'll give you a quick email there. So that was just a quick, snippet, right, of really what you're getting in all the educational videos. Keep in mind, this was only one of the videos that I showed you. So with this, folks, we're going to go ahead and wrap this session up. I'm going to let the link kind of roll there in case anybody does want to join live, so that you can get the free stuff we discussed. And Laurel, send me an email, please, if you can. I'll put the contact there. So, okay, cool. All right, so I'll leave my contact there, folks. You can call me, email me. Keep in mind, it's Friday. I'm the only one here, obviously, at this point. But I'll still reach out tonight, because this expires at midnight. And anything else that you have questions on, we can discuss. Have a great day, everybody. Make sure you enjoy your weekend. Stay safe. If you're in Florida, make sure you're all right. And thanks for being here. Thanks for watching, being part of the community. There's a great amount of traders there that are ready, willing to help. There's a great team. I've signed up probably like 95% of the people in that chat room since I launched it with Nick. It was about more than a year ago. And, it was just me and Nick. And then now there's over 350 people live, during that peak of the hour, peak of the day. So it's a great place to see how it's evolved, how people are improving their trading, their education. And more importantly, we're building a great workplace, because that's what it is. Even though for you guys on the, like if you're just looking at this could be like, oh, just trading, whatever. But we have people that trade full time for a living in the chat room. We have people that do it part time. We have people that are learning how to do it because they're planning on going full time. So it is a legit workplace. Like, yes, like I work here and, it's like an actual workplace, but then the live room is a workplace for retail traders as well. And I'll get into the chat room here and there and do a couple trades, ask Nick if I really need to manage a trade, because that's really what I find very, very interesting, that at any point in the day, if one of your trades is not working out, because some people can do their trades and they just need a little help managing the trade is the hardest part of the whole trade, right? But you have Nick there throughout the whole day, 9 to 5. And that's really why you can get that value. Some people, and look, as a new trader, I didn't really know that or understood that, but it's very important that you do get that. Managing the trade is more important than opening and closing that trade. And that goes for your wins, for your losses. And if you're trying to manage your trades on your own and you're starting out during a recession on a bear market, good luck to you, man, because the odds are already against you, So if you need to give yourself a chance as well, right? So that's really what this chat room is for, to help retail traders. And I think that does it, folks. Thanks everybody for watching. I hope you guys have a good weekend. We'll see you guys in the chat room. Make sure you stay safe, trade responsibly, and we'll see you folks next time.